Hello, and welcome to Optimised Monthly Energy Market Insight for October 2025. I'm Dave Schofield, Head of Energy Markets and Trading, and I'll be taking you through the latest market developments. Gas and power prices began the month on a firmer note following renewed Russian attacks on Ukrainian gas infrastructure, which heightened supply concerns across Europe. That early rally soon faded as strong Norwegian flows, steady LNG arrivals, and milder weather improved fundamentals. European storage remains stable, around that 83% mark, slightly lower than last year, but well above the seasonal norms. UK power largely mirrored the gas with limited liquidity and prompt prices kept in check by strong wind generation. Geopolitical developments continue to play a major role this month. The European Union confirmed a 2027 ban on Russian LNG and a phase out of pipeline gas by 2028, reinforcing its long-term supply diversification strategy. However, repeated Russian strikes on Ukrainian energy infrastructure maintained a near-term price risk. Political divisions within the EU over sanction enforcement added some further policy uncertainty, while US-China trade tensions and a slower industrial activity continue to weigh on global energy demand. Carbon markets traded quietly throughout the month of October, with both EUAs and UKAs holding near that €80 per tonne mark. Investment funds scaled back long positions, keeping price movement contained. In contrast, oil markets strengthened late in the month following new US sanctions on Russian oil producers. A sharper than expected draw in global inventories added to that sense of tightening of supply, offsetting concerns over softer Asian demand and maintaining moderate upward pressure heading into the month of November. As we move into the month of November, market direction will be heavily dependent on weather conditions, LNG stability, and geopolitical tensions. A mild and windy outlook is expected to limit heating demand and keep prices subdued. However, any escalation in the Russia-Ukraine conflict or disruption to LNG shipping routes could quickly reverse that sentiment. Market participants will also be watching the OPEC Plus production signals, EU policy decisions, and storage withdrawals as Europe enters into the early stages of the winter heating season. That concludes October's monthly energy market insight. Overall, fundamentals remain balanced but fragile, with the market still sensitive to policy shifts, weather trends, and geopolitical shocks. Strong renewable output and stable storage levels should help temper some of that short-term volatility though. Thank you for watching, and join us again next month for our November review and December outlook, when we'll review the early winter performance and the evolving energy landscape.